is Lau Jia-yi and my metric number is 286946. Today I want to present my part, which is the introduction and the company's background. First and foremost, introduction to financial accounting is the principle of a business financial account, which must be kept control of their everyday transactions. The principal purpose of the financial accounting is to keep records of all transactions that have occurred in a business and to also record sales which are gained or lost in a business. Financial accounting also aids managers in running their businesses more efficiently and successfully by providing access to all financial data, including expenditures, revenue, losses, sales, and cash flow. Furthermore, financial accounting provides internal and external stakeholders with legal and reliable information to let them decide whether or not to participate in the company of their choice in order to avoid additional losses. Accounting records are classified into three types: sale ledgers, buy ledgers, and general ledgers. Financial accounting is crucial because it allows the public to see what is going on. Businesses are transparent in publicizing their financial performance by releasing their data, and the corporation requires data to make decisions. Financial accounting information provides 46% of effective information data, according to Olvidia from 2013. Thank you. Now I want to present about the company's background. The first company is Dialog, which is founded in year 1984 through the cooperation with internationally renowned technologies partners. The company provides services to a variety of customers, including international energy professionals company, national energy company providers all over the country world. Dialog is also listed on Bursa Malaysia main market that the total capital is approximately 30 billion ringgit as September 2021. The vision of the company is to be the leader of integrated technical service provider in Malaysia and overseas to the energy sectors. Their mission is to continuously improve their leadership, competition, and competence in provision of the service. They will also continue to develop a high-skilled and strict workforce to produce results that improves business into strategic growth to reach the world. The second company is Wang Xiong Corporation Berhad, which is established in 1999 and has since grown into a multinational oil and gas and industry service group. The company has achieved in more than 40 countries around the world and is listed on the main market of Bursa Securities Exchange Berhad. The company mission is to become a global oil and gas and organization that builds their portfolio of companies into a world-class quality and standards. The company's purpose is to become the preferred partners for their clients, providing outstanding service and trustworthy solutions while providing sustainable development and value to the employees, shareholders, partners, and stakeholders. Thank you.
Hi everyone, my name is Yap Jun Hong and my metric number is 286732. Now I will continue this presentation with liquidity ratios. Liquidity ratios are financial measurements that used to determine a company's ability to fulfill its short-term debt obligation. In another way, we also can say that this ratio is used to measure the company's ability by using current assets to cover the current liabilities. In this research, there are two liquidity ratios applied, which are current ratio and quick ratio. For the current ratio, the function of current ratio is to measure a company's capacity to repay short-term liabilities with short-term assets, such as cash, inventory, and account receivable. The formula for current ratio is current asset divided by current liability. In addition, the investors are more likely to invest into a company who has a high current ratio compared to the low current ratio because the company is not easily to become bankruptcy. This table is the information regarding the data about current asset and current liability for Dialog Group Berhad and Wang Xiong Corporation Berhad in year 2020. This all information come from the company's annual report. Based on this information, by using the formula, we know that the current ratio for Dialog Group Berhad is 1.69:1, while Wang Xiong Corporation Berhad is 0.83:1. This means that the Dialog Group Berhad has the high ability to pay short-term liability with short-term asset compared to Wang Xiong Corporation Berhad in 2020. For the quick ratio, the function of quick ratio is to measure a company's capacity to satisfy short-term obligations using its most liquid asset and reverse its short-term liquidity position. The two types of formulas for the quick ratio is showing on the slide. The first one is cash and equivalents plus account receivable plus marketable security divided by current liability. The second type is current asset minus inventory minus prepaid expenses and divided by current liabilities. In addition, the investors are more likely to invest into a company who has high quick ratio. Based on this table, by using the formula, we can know that the quick ratio for Dialog Group Berhad is 1.63:1, while Wangshaw Corporation Berhad is 0.66:1. This shows that Dialog Group Berhad has a better ability than Wangshaw Corporation Berhad to repay short-term obligation using quick assets.
Good day to Dr. and fellow friends. I'm Ng Yao and my metric number is 2S6836. Now I will explain my published activity ratios. Activity ratios are the measurement of how well a company utilizes its asset to generate revenue. On the other hand, it also can be used to track a company's financial success over multiple accounting periods in order to identify trends. Activity ratios are divided into three parts, which are inventory turnover ratio, total asset turnover ratio, and account receivable turnover ratio. First, inventory ratio is an efficiency ratio that measures how the inventory is being managed efficiently. The formula of inventory turnover ratio is cost of goods sold divided by the average inventory. So, the table shows that the inventory ratio of Dialog Group Berhad was 19.82 times, while Wasion Corporation Berhad was only 5.31 times. It implied that the Dialog Group Berhad can sell the inventory it buys more efficiently. In addition, it may show that Dialog Group Berhad is not overspending on inventory purchases and is not lead to the high storage and holding costs compared to Wasion Corporation Berhad. Next, the asset turnover ratio measures the value of sales or revenue of a company compared to its asset. The higher the asset turnover ratio, the higher the company efficiency can generate income from its asset. The formula is net sales of the year divided by the average total asset. The following table shows that the total asset turnover of Wasion Corporation Berhad was 0.25. Therefore, for every ringgit Malaysia in total asset, this company would generate 25 cents in sales. Conversely, the total asset turnover of Dialog Group Berhad was only 0.15. The lower ratio indicates that this company is not using its asset efficiently. Therefore, it shows that the efficiency of how well Wasion Corporation Berhad use assets to produce sales compared to Dialog Group Berhad. Lastly, a company's ability to collect account receivable or money owed by customer or clients is known as account receivable turnover ratio. The formula of this ratio is net credit sales divided by the average account receivable. From the table, we can see that the account receivable turnover ratio of Wasion Corporation Berhad is higher than Dialog Group Berhad. The collection of account receivable of Wasion Corporation Berhad is frequent and efficient. A high account receivable turnover also demonstrates that the company enjoys a high quality customer based on the quickly pay its debts. That's all from me. Thank you.
My name is Chung Jiahui. Number metric is 2x6931. Now I will continue with profitability ratio. Profitability ratio is applied for identifying the corporation's ability to create profit compared to its operating price, revenue, shareholder equity over the years, and balance sheet from a specific time. There are two types of profitability ratio, which are profit margin on sales and return on asset. Next, profit margin on sales. Profit margin on sales is used to contrast a firm's net income and net sales to define the quantity of net income earned from sales revenue. Lender and investor also use this ratio to assess a firm's ability to convert sales revenue into net income. The formula for profit margin on sales is net income divided by net sales. Based on the table, we can see that net income and net sales for Dialog Group Berhad is higher than Wasion Corporation Berhad. By dividing net income with net sales, the profit margin on sales for Dialog Group Berhad is 61.7%, while for Watson Corporation per hat is negative 49.04%. This also means that Dialog Group per hat earned 61.7 cents for every ringgit of sales, while Watson Corporation per hat lost 49.04 cents for every ringgit of sales. This also means that the business of Dialog Group per hat is running smoothly than Watson Corporation per hat in the year 2020. Next, return on asset. Return on assets is used to show how the company efficiently uses its assets to create profit. The formula for return on asset is net income divided by average total asset. Based on the table, we can see that net income and average total asset for Dialog Group per hat is higher than Watson Corporation per hat. By dividing net income with average total asset, return on asset for Dialog Group per hat is 9.33%, while for Watson Corporation per hat is negative 12.43%. This means that for every ringgit in asset, Dialog Group per hat earned 9.33 cents in profit, while Watson Corporation per hat lost 12.43 cents in profit.
Now I will continue with the leverage ratios. Leverage ratios are the financial measurement that used to measure the level corresponding to the dips that a company had incurred. This ratio compares the numbers of dips obligations to the company's asset or equity. There are two leverage ratios applied in these ratios, which are dips ratio and dips to equity ratio. The dips ratio also can call as dips to asset ratio. For the dips to asset ratio, it used to determine the percentage of asset paid with dips. It is calculated by dividing the total asset from the total dips. In addition, the creditor and lender are more preferring to lend when the dip to asset ratio is close to 0 rather than close to 100 or more. Based on this table, by using the formula, we know that the dip to asset ratio for Dialog Group Berhad is 41%, while Wangshaw Corporation Berhad is 67%. It means that the portion of asset paid with the dips of Wangshaw Corporation Berhad was higher than Dialog Group Berhad. For the dip to equity ratio, it's used to determine a company's financial risk by comparing total dips and total equity. It is calculated by dividing total equity from the total dips. In addition, lender and creditor prefer to choose the low-risk companies for lending. Based on this table, by using the formula, we know that the dips to equity ratio for Dialog Group Berhad is 69%, while Wangshaw Corporation Berhad is 201%. It shows that the portion of dip with the equity for Wangshaw Corporation Berhad was higher than Dialog Group Berhad.
In conclusion, financial ratios help investors to analyze and gain information about the finance of a company or the entire business sector to create a better investment plan. As overall, the financial ratios of Dialog Group Berhad are better than Watson Corporation Berhad. Consequently, Watson Corporation Berhad should manage their debt and get more contracts to increase their sales revenue, then it will be more confident for the investor and institution to invest in their company. That's all for us. Thank you.